Home prices have started taking off again in Orange County. The median home price rose 4.2% from January to February, which is an absolutely massive month-over-month price gain. This rate of appreciation is very similar to what we saw in the start of 2021, where we had an absolutely massive run-up in home prices from January through about May. I'm Tim Hamilton with StellarQuest Real Estate, and this is our March monthly housing market update for Orange County. We're going to be discussing why home prices have continued to skyrocket despite the higher mortgage rates. If you enjoy watching this video, I would really appreciate it if you hit the like button below. And please subscribe if you like to stay up to date on the housing market. I do a lot of different housing market update videos, and I cover forecasts from a variety of sources. First, let's talk about why home prices continue to shoot up despite the recent increase in mortgage rates. To put it simply, we have a big imbalance between supply and demand. There simply aren't enough homes on the market to satisfy the total number of buyers who would like to purchase a home. This results in a very competitive market where we see a lot of multiple offers, bidding wars, and homes selling above the asking price, which is ultimately what drives prices higher. The root cause of this imbalance is primarily a supply issue. The number of homes for sale in Orange County is much lower than it has historically been, while the demand readings are very similar to past years. I've been talking about the extremely low number of homes for sale in my market updates for a while now, and this year is even worse than it's been before. We have the lowest number of homes on record, which has been tracking for 19 years. So we started the year around 1,100 homes for sale, which has risen to about 1,400. This is good, but it's not nearly enough to satisfy the number of buyers who want to purchase a home. To put those numbers in perspective, back in 2019, we had over 6,000 homes on the market during this time of year, and in 2020, we had just over 4,000. So we have a long ways to go if we want to get back to anywhere near normal. Another reason the housing market could be so hot today is because rising mortgage rates can sometimes have a short-term boost on buyer demand. Some buyers will scramble to lock in a lower interest rate today if they anticipate that rates will continue to rise in the future. If rates do continue to rise and stay at elevated levels, this will eventually become a headwind for buyer demand as purchasing a home becomes more expensive. You can see on this graph that buyer demand has been steadily rising since the start of the year, but it's still slightly below where we were over the past few years. I would argue that if there were more homes listed for sale, this number would be higher because buyer demand is measured by looking at the past 30 days of pending sales. So if there aren't enough homes on the market, it can start to limit the potential for the buyer demand numbers. Stephen Thomas, the author of the Orange County Housing Report, does not believe that inventory can grow substantially until interest rates get over 4%. This is because in the lower rate environment, homes are selling about as quickly as they're coming on the market. If higher interest rates start to inhibit buyer demand, then the number of homes for sale can start to grow and we can resume back towards a more balanced market. This is a very interesting graph that shows what happened to the expected market time in 2013 as interest rates started to rise. The expected market time is the average number of days it takes for a home to enter into escrow after being listed for sale. So a low expected market time signifies a hot seller's market, and as the expected market time starts to rise, it means the housing market is slowing down. So you can see on this graph in 2013, as interest rates rose, which is the dotted purple line, the expected market time also started to rise, which is the solid green line, which signified that the market was slowing down as interest rates rose. A very similar thing happened in 2018 as well. Now looking at what's gone on in 2022 so far, you can see that the interest rates have really shot up, but the expected market time has actually been dropping, which means the market has been heating up. So we're either going to need to see higher interest rates to inhibit buyer demand, or more homes coming on the market at a faster rate if we're going to resume back to a balanced market. If you need help buying or selling a home, please feel free to call or email me anytime. I am more than happy to answer your questions and let you know what I can do to help. All of my contact information is in the description below, including my cell phone number if you want to call or text me anytime. If you want to stay up to date on the housing market, just let me know. I can send you the most recent Orange County housing report once every 2 weeks when it's released. Once again, if you liked this video, please hit the thumbs up button below and subscribe if you like to stay up to date on the housing market.